How much of what they've done thus far has filtered through and had an impact on inflation, David, do you think? Because, the war is still continuing and the pressure on food prices and oil prices still remains, even though I think locally prices have come off quite a bit in the U.S., gas prices, that is.
Yeah, I think the impact on inflation is going to take a long time, realistically, and I think Fed officials have always understood that. If you look back to their economic projections from the start of the year, they have always seen it as a multi-year process bringing down inflation. I think the rate hikes, along with the fiscal tightening we've had this year in the U.S., have been very successful in slowing the pace of demand growth to a rate that is well below the economy's long-term trend or potential, so that supply is catching up with demand. That is also translating to a rebalancing of supply and demand in the labor market that is still in its early stages, but is going very well so far. It's going to take longer, though. It's going to take more labor market rebalancing to see that translate to a softer pace of wage growth and ultimately a softer pace of inflation. I think we heard from Chair Powell today that the FOMC does not have unrealistic expectations. They realize that there's going to be a fairly long time lag from higher interest rates to lower inflation. But I think looking at the data, they can feel good that those rate hikes are having an impact on slowing growth, on rebalancing supply and demand in the labor market. We are seeing tangible results. We are moving in the right direction.